March 9th, 2024 is the 15-year anniversary of the market low made during the global financial crisis, one of the most uncertain and challenging times that investors ever faced. There are three critical lessons from that time that we can use to help us make better future investment decisions. First, these kind of market events are impossible to perfectly predict. I am not aware of anyone who was able to sell right before the market began to decline and then began to buy right before the market went back up. In fact, let's look at the Wall Street Journal and Time magazine headlines from that lowest market day during the crisis. The Wall Street Journal headline on March 9th, 2009 was, "How low can stocks go?" This is the Time magazine cover from March 9th, 2009. Again, the absolute lowest point during the global financial crisis. In hindsight, the headline should have been, "This may be the best buying opportunity we ever see." Second, staying diversified felt less painful and allowed you to recover faster. The S&P 500 was down 55% at that low point, while a 70% stock, 30% bond portfolio, made up of 70% in the S&P 500 and 30% in the aggregate bond index, was only down 40%. The stock and bond portfolio also recovered much faster, getting back to break even almost 15 months sooner than an all-stock portfolio. It took the diversified portfolio a little more than 3 years to recover, while the S&P 500 all-stock portfolio took almost 4.5 years. Finally, as usual, if you were able to wait out the crisis, you wound up with wonderful results. A $1 million investment in the S&P 500 on October 9th, 2007, the day before the crisis started and the absolute worst day to invest during that time, is now worth $4.5 million, a return of about 9.5% per year. Anyone brave enough to make a $1 million investment instead on the low of March 9th has seen their investment grow to more than $10 million 15 years later, a return of almost 16% per year. Peter Lynch, one of the most successful and well-known investors of all time, famously said, "Far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves." A market crisis like this one will happen again. I don't know when or what will cause it or what the headlines will be, but I do know that I will use these lessons to help our clients successfully make it through, just like I did 15 years ago. Thank you, and I look forward to talking with you again soon.